Hi, good evening, everyone. I'm Amy Lei, a stock trainer at Homely Chart Company, which is a stock training school. Okay, so today's video is the 25th of my channel, Amy Stock Analysis Daily, and there wasn't new updating yesterday because I was off. So have you been looking forward to my new updating? I hope so. Okay, so this week we will begin a new topic. Okay, so the topic this week will be about the price down after buy, up after sell. So this is a very common phenomenon that many traders or investors come across in the stock market. Every time when they buy, the price will drop. So when they sell, the price would rise. So as if they have been monitored by someone, right? So what's the reason? Why is this? Why is like this, right? So we are all wondering. Okay, so this week I will try to help you find out the reasons why is this, right? And then also how do we cope with this phenomenon and find some effective solutions, right? Okay, so the first reason why every time we buy, the price of the drop, or we sell, the price of the rise, is because we trade based on news and tips. Okay, so especially for those who don't want to spend time studying the techniques about how to trade. Either you are studying fundamental analysis or you are studying technical analysis. Maybe some guys, they are trying to learn and improve, to learn the skills, the necessary knowledge and skills. But for some people, they just don't want to learn these things. They just want to trade based on news and tips. For example, I show you some cases. So recently, roughly one or 2 months ago, I have talked to a stock investor, and this guy, he traded a Malaysia share, and the share is 2771. Okay, so it's 2771. Okay, so this is a Malaysia share. Okay, so this is a Malaysia share, and when he asked me about this share, I think that's around 28th May. Okay, so back at this moment, 28th May, this guy told me that he had bought this share just on this day, 28th May. And when I asked him why he bought it, and his answer is he got some tips from friends that plantation shares, Malaysia plantation shares, would be very bullish in near future, have very great potentiality in near future. So because he has checked this share is a plantation share, you check the stock information. So this company, it operates oil, palms, and rubber plantations. So this is related with plantation, and this guy got tips from friends that this one got tips from the tips that in near future, plantation shares of the Malaysia market would be very bullish. So that's why he choose to enter on this day, 28th May. But after he entered, the following day is small doji, something like a small doji, then begin to drop until now. Okay, you see, this is based on the tips he got. After he buy, then the price drop. So why? Because before that, we see before he buy, the price has give us a handsome 2 days rise. It seems quite attractive. And then after he got the news or got the tips, then he felt really this is a good bullish share in future. So that's why he bought without hesitation. He feel that it's quite good, right? But the fact is, after he buy, the price keep dropping all the time until now. After he bought, he hold until now. You see, he has lost 17%. He has lost 17%, and has wasted the time. Here, 26 trading days. He hold for 26 trading days, only turned out to be at a loss by 17%. So you see, this is extremely a waste of money and opportunities, because we know that recently the Malaysian market, a lot of shares quite bullish, really bullish shares with great potentiality, but he just missed them. He picked the wrong one. Why? Because he buy based on the tips he got from some friends, right? Okay, so then if we don't trade based on the news, what's our take on this share? How do we analyze? So the day he was planning to enter, is it a good entry point? So in previous sessions, I have shared with you this indicator called homely rainbow, right? We know that homely rainbow is an indicator, is a trend indicator that can help us track the long-term, medium-term, and short-term trend. And we know that the white rainbow lines represent the long-term trend, the yellow line represent the medium-term trend, and the green line the blue lines represent the medium-term to long-term trend. It's longer than the yellow lines, but shorter than the white lines. And then we also get 3 red lines and 1 green lines, altogether 4, representing short-term trend. Okay, so the day when this guy entered, we see very clearly the price just touched the resistance of the blue lines. We know that the blue lines would be very strong resistance because it's a medium-term to long-term trend line. When the price tries to break up, it would be a very great resistance. So we will never buy if we check homely rainbow at this moment. We will never try to buy, because for long term, the trend is still down. The price still far away from the white lines. The white lines represent the long term, right? And for medium term to long term, we add a very strong resistance level. So it's not the buy point, either for short term or for medium term to long term. So that's why we see after that the price unable to break up the resistance at the blue rainbow lines, then begin to drop until now. So currently, what we know about this share is the price is at a very strong support provided by the yellow lines of homely rainbow, right? So homely rainbow yellow lines now are acting as the strong support. Maybe in future, if the price can stop dropping further at this strong support and turn upward again, and in future, if it can break up the white lines of homely rainbow, means maybe really it would become a very bullish share in future. But now it's still too early to come to such a conclusion. So what we do, we just follow the indicators. The indicator tell us this is not a buy point. Means the guy here entered at the wrong timing, and now we have some support here. Maybe if you really want to trade for short term, maybe you can try some when the price can stand above the blue rainbow, because there will be some distance between the blue and the white, right? You can buy and maybe hold for short term trading maybe combined with some fund indicators. Some indicators can help you check the money flow, inflow and outflow. Maybe you combine for short term, you can catch some opportunities, but it will always be risky. And also the rising space here is not that big. It's just a small rising space here, right? So great opportunity might come in future if the price can successfully stand above the white lines of homely rainbow. And also at that moment, we can combine with multicolor dragon, right? So multicolor dragon, we know this indicator is to check the big boys, the retailers, and hot money, or we call them speculators, who come in and out frequently, maybe intraday or today in, tomorrow out, right? And we see that currently the share, it still has some green. Green means the retailers. And of course, currently we have the big boys around 50%, which is a positive signal, means that in future this share might have a potentiality, but it's still too early to enter because we still need a price reverse to long-term bullish. The white rainbow lines here in future would be strong resistance before the price can successfully stand above the white rainbow lines. So better not to enter. It's not the best entry point. So you can monitor this one. Definitely is you don't need to enter at this moment, right? Back 28th May, the day when that guy entered. Okay, so this is the first example I want to share with you. Okay, so another example I want to share with you is Tesla. Okay, so Tesla, the story is also I talked to some investors recently who told me that he was he regretted to sell too early when the price reached the previous high here and begin to consolidate. So he sold away Tesla. The reason is his broker told him that it's already quite risky, and he also heard some bad news about Tesla. Okay, some bad news about Tesla. Okay, so that's why he decided to sell. After he sold, then the price just shoot up in several days by a very great price change. How much you check? That's 37%. So he missed 37% of profit because sell too early. After he sell, the price just go up. So that's the problem, right? Every time we buy, the price drop, we sell, the price go up. So this is the case. He sold away to Tesla, then Tesla go up immediately at a very fast speed. Okay, so then how do we deal with Tesla if we don't refer to the news, we don't refer to the tips by the brokers? So what's our take on Tesla? How do we approach Tesla? Okay, so a simple criteria. You just need to check multicolor dragon, right? So if you check multicolor dragon, you will see very clearly when the price consolidates at around the previous high level. We know that the previous high would be a resistance. There's no doubt about that. But even when the price faced with resistance, it doesn't mean that the price mustn't drop, right? So how do we know the probability is high or not? The price can break up the resistance and continue going up. You just check multicolor dragon, and the information we get is for this share, although the price keep consolidating here for more than 2 weeks, roughly 2 weeks here, still we see no retailers, no green bar, right? Green means retailers. If no retailers, and also a lot of red bar representing the big boys, and a lot of big boys means what? It's extremely bullish. So the probability is very high that the price will break up the resistance and continue going up. So the conclusion is, when you have bought a share with big boys, take full control, never be too eager to sell it, or never sell it too easily. So how do we judge it is fully controlled by the big boys? You check the value for the red bar. You check here. This level is called 75%, right? So if you see the red bar above 75% and remain quite stably above 75%, means the big boys not only take control, but they take full control. So they fully control the price movement. So when that's the case, usually the share in future would go up at a very fast speed. It will be quite crazy. So after you got this information here, you will never sell Tesla. You will never sell it too early. Okay, so that's how we can secure the profit and keep holding the very bullish shares. Okay, so this is Tesla. There is another example I want to share with you. Another share is a Hong Kong share. So this one, you see, this one is that I know a guy who has bought this share around the end of last month. Yeah, I think it's around 30th June. The end of last month, he bought because of he has joined some WhatsApp group. This WhatsApp group is a group where some guys would recommend stocks to you, and he previously has followed the group, the shares recommended in the group, and realized that, wow, it seems like the previous several times the recommended shares, the performance not bad, right? So he feel that it should be safe or okay to buy this time, because this is a share just recommended end of June. He bought it, and then the share just rise for 2 days. Then what we see is just Monday. This is yesterday, right? So just yesterday, the price gap down open. Wow, it's a very big gap down open. If you check the drop, how much the percentage of the drop from yesterday until now, that's 75%. Okay, when he bought the share, his cost price is around $1.50, and now the current price is only 37%. He has lost more than 70% of his capital. And the bad news is he has bought a lot, very heavy position. So this is a very great loss suffered by him. Okay, so this news tells us that never too easily trust those who recommend stocks to you. So this is a problem for many people when they let's say follow the recommendation of some guy. At the very beginning, they don't believe, but after several times, they monitor and then feel that the shares recommended quite good, so they choose to believe the guy, and then after he buy, then great loss. So this happens again and again in the stock market. I know a lot of similar stories. Okay, so actually for this share, how do we know it's not a good one to buy? Firstly, if you know some common sense or you know some basic knowledge about stock investment, it's a Hong Kong share just at the price of $1. For Hong Kong shares, if the price is just around $1, $2, it's extremely small share. This kind of penny stocks, you need to know from the very beginning, it's risky. It's not that safe to trade. It's not that safe to trade. Okay, so this is the first let's say evidence or first reason why we need to be very careful with this share. Why we would not just buy immediately after recommended to us. Okay, so the second reason, actually you can check a very normal indicator called volume. Okay, so if you check volume, this is also the basic knowledge about technical analysis. If you can read some chart and you can read, you know the basics about how to read volume, what you see is okay. So the day you enter, okay, so maybe you have entered wrongly. It's not a very good entry point. Let's say 30th June you bought. Okay, so after you buy, you follow, what you see is, let me open the software again. Okay, so after you buy, let's say around 30th June, or if you cannot recognize, if you think that it's not that dangerous to enter, maybe you enter, okay, you at least need to monitor, right? Then you check the volume on 3rd July. So you will realize that this is extremely high volume. So this day the volume is 200, more than 200 millions, right? So more than 200 millions for a single day, and the previous day that's only around 10 million. So in just one trading day, the volume is already 20 times, more than 20 times of the previous day. So when you see this, usually, especially after a sharp rise, this is already a very big rise, right? So when you see after a very big rise, and then the volume enlarges greatly by 20 times, this is abnormal, and you know that this must be people previously have made profit. They are taking profit here, especially the big boys. Maybe because this is a penny stock. If the big boys, they enter, and they can enter in a short time, and they can leave also in a very short time. Just one day they can leave or leave completely. But if this is a blue chip, or this is an expensive share, that might be another case, because the big boys, if they have entered, then it will take them a while to leave. The price may not just give you this kind of sudden big jump, more than 70% negative, right? So, but the problem is, this is a penny stock. We mentioned at the very beginning, it's already quite dangerous, and then you see the volume enlarge greatly by 20 times. This is abnormal. So this is about knowledge, basic knowledge about stock investment. So knowledge you must know, because this is the basics, right? Okay, so just to share with you these several cases to analyze the reason, the first reason why we always cannot make profit, and why after we buy, every time the price would drop, and every time we sell, the price would go up. First reason, because we trade on the news and tips. So share with you the several cases so that you know that it's not the reliable method to make profit in the stock market. So this one about this Malaysia share, the plantation one. So we know that when the info is known by all, it's already useless. Maybe you see before the 3 days big rally, maybe really we have the good news, but after the rally, the news already digested, already being well digested, so known by many people, by all people, so no longer useful. And if you just trade based on the news, of course you buy, the price would drop, no doubt, right? So we need to check the indicators to find the proper entry point, to see whether or not it's the proper entry point. So we check the homely rainbow, we realize that on that day, that's already at a very strong resistance of the blue lines of homely rainbow. We definitely would not enter after check homely rainbow, right? And the other case is about Tesla. Why we sell, then the price just go up by more than 30%. Reason? You follow the recommendations, you follow the tips, but how do we know we shouldn't sell? Simply check multicolored dragon. We see the red bar representing big boys can stay above 75%, quite stably for a while. So this kind of share, we call it big boys take full control. So never sell a stock with big boys take full control easily. You will always regret. You will always sell too early. Okay, so the last case I share with you, this is a sad story. So this is a sad story. So this guy, he lost a great sum of money, more than 75% in just one day. And I shared with you the reason. So firstly, the penny stocks not that safe. Secondly, so if you know some basic knowledge about how to read volume, you will realize that extreme high volume after a sharp rally is likely to be the big boys taking profits. Okay, so because the big boys take profit, if the penny is just a penny stock, the big boys also can leave in just 1 or 2 days. But if it's a blue chip, then it's another story. You might be able to have enough time to respond, to sell in time, but this is penny stock. It's always risky. Okay, so then you are wondering, how do we learn this knowledge about volume, about the candlesticks, about support and resistance? So for Homely is a stock training school which has a history of more than 20 years. So in Singapore, we have landed in 2009, so it has been more than 10 years in Singapore. So we are a very professional stock training school. So we provide training courses for our members, and we teach them the knowledge about technical analysis. We have different levels: basic level, advanced level. So you see, basic level, you can learn all this knowledge about Dow theory, the trend theory, about the moving average, about oscillator indicators, candlesticks, right? And then for advanced level, we have lessons about price and volume analysis. So you see here, just now we were applying the basic knowledge about volume. And then we have the tangent line and application. We have wave theories. All these knowledge you must master, or at least you must know if you really want to make profit based on technical analysis in the stock market. Okay, so just now we said that the guy who has traded the Hong Kong share Lotus, he lost more than 70% in just one day. But here you see we have a very sharp contrast. This is the chat history between me and one of my member. Yeah, this member has joined Homely roughly around 1 year, less than 1 year, almost 1 year. Okay, so this is the chat with him this morning. Okay, so this is this afternoon. It's not this morning. So this is this afternoon. He sent me his trading performance, and he has successfully made a profit of 30% recently, and bought this US share called SQ, and the current price is $118. He bought recently, and now he has secured 30% of profits. So he has got this share based on the red and white circle. This is red and white circle and multicolor dragon. So red and white circle I also shared with you in previous sessions, right? And multicolor dragon we just not checked. It's for checking the big boys and the retailers and the speculators, right? So he filtered based on red and white circle and multicolor dragon, and until now made a profit more than 30%. So he said, I told him that you are awesome, and he said that he just followed the software. Yeah, he just followed the software to make the profit. He filtered based on the software, and he buy and hold based on the software. And yeah, already he sold away, right? He sell based on the software. Okay, so this is a very sharp contrast. It shows you that if you just trade based on the tips, the news, the recommendations, not reliable, sooner or later you will, let's say, lose great money in the stock market. You will never be able to finally make profit in the stock market. So you need to begin to learn now. It's about the time you begin to learn, and you begin to follow some trading systems. So in last week, the topic I shared with you about the profiting model, right? So you really need to begin to set up your own profiting model, and Homely will always be here, ready to help you achieve the goal, to help you set up your own profiting model. Okay, so this is all about today's sharing, and today I share with you the first reason why every time we buy the price go down, we sell the price go up. The second reason I'm going to share with you tomorrow is, I call it the gun backfired, because the first reason we talk about some guys who don't learn, who never learn and study, right? That's one type. But for many people, I believe in the stock market, they really have learned a lot about fundamental analysis, about technical analysis, especially for those who are study technical analysis. They may have traded based on moving average, based on based on KDJ, RSI, but still, after they follow the indicators to buy, after they buy, the price still drop. After they sell, the price still go up. So what's the problem with these guys who have learned, who have spent the time learning and studying? So what's wrong with them? So the reason I'm going to share with you the reason tomorrow. I call it the gun backfed. So if you are that type, you have studied but still cannot make profit, cannot enter and exit at a proper timing. So you definitely don't want to miss the session tomorrow. Okay, so see you tomorrow 8 p.m. Bye bye.